All right, we good.
All right. Hello, everyone. This is Adrienne from Fame Consulting. So we have a new segment. I'm really excited to announce it, and I'm going to let my colleague Jamaal introduce himself. He is your go-to person when you have crypto questions. So Jamaal, take it away.
Good evening, good morning, wherever you're at in the world, people. My name is Crypto J, also known as Jamaal Solomon. I'm just your regular 6'5", 50-pound tax accountant who just so happens to be a big fan of Wu-Tang. So I write, I talk, I do a lot of stuff. And what I learned in life is that I cannot write anything complex or anything tax related unless it's creative. So being that I'm a Wu-Tang fan, and I know there's a very importance to educate people about crypto taxes, we're going to have our series is going to be called the 36 Chambers of Crypto Taxes. If you need to know why I call it 36 Chambers, you are not a hip hop fan and you need to Google why I call it 36. But however, I love how that album had a big impact on my life with how they creativity and all that stuff. So anytime you hear me talk about crypto taxes in general, you know it's not going to be straightforward. It's going to be creative, but at the end of the day, you're going to learn, and we're going to educate y'all about crypto taxes.
Yes, thank you, Jamaal. So we're starting off with something light. So for today, Fame, we like to do it quick, easy, within 10 minutes or so. The IRS is coming. Like, what can you tell people to get them prepared when it comes to crypto and the IRS?
When it comes to that, because I represented like over 200 people in front of the IRS and multiple state governments, and I just know for a fact they're coming. 2017, 2018, crypto taxes is the absolute last thing on their head. Like, they just heard about it on, the news or here or there. But when they saw everybody calling crypto millionaires and zillionaires, and the government's like, whoa, the government don't like losing money when they know they're losing money. So right now they are dedicating divisions to figuring out how to treat it, how to go after people. So if you was a crypto millionaire in 2017 and it's 2022 right now and you think you got away, nah, it doesn't work that way. You should be really having that conversation with your tax accountant to say, hey man, I know I got to pay you now, even though I was a little cheap with you when I was a millionaire. You don't want that letter when it finally comes, because it's nasty. I'm going to let you know how these letters come. It's like, okay, you owe $25,000, and then they say, oh, by the way, interest penalties. And it's the interest and penalties that's just going to be the killer. It's going to make you cry, and it's going to make you feel like, man, I really should have paid my tax accountant. But here's the good news. You still have time to be proactive. You still have time to say, hey, tax accountant, I know I didn't treat you right, but here's my stuff. And you could get ahead of the game, because right now they still trying to figure stuff out, but they're getting better. And what they're going to do, they're going to put pressure on the exchanges. So I know you love Coinbase and all these wonderful things that's empowering us, but they're going to snitch on you real fast, because what's it going to come down to, the IRS is going to say, hey, listen, we know people making money. Give up the names. If you think Coinbase is going to be like, no, we're not going to give up your names because they love you as a client, they're going to be like, oh, okay.
By the way, so do you need socials too? Like, they want all your info.
Because they got board members to take care of, they got family to take care of, so they don't want nobody wants problems with the government. But you got to be proactive and you got to do it yourself. It's the worst, Adrienne, when I hear people, especially within our community, and I say, hey, listen, you always preaching this stuff on social media about all this money that you're making. Did you file your taxes? Oh no, they can't get my identity, and they argue with me. I'm like, whoa, first of all, no need to argue with me. I'm not the IRS. I'm just trying to help you. But you don't want to be that person, guys, because I've been in many situations that people thought they were smarter than the government. Nah, not really. And don't do that. Oh, the rich get away with it, and then this get away, and Donald Trump get away with it. They got lawyers, judges, politicians, billion-dollar accounting firms just so they can get away with it. That's how they get away with it. It's not free.
Yeah, they have people who are doing the research, like combing through the regulations, the laws, the rules. If you don't have that person on your team, I'm just saying, one, get with an accountant ASAP. Two, it's so important to just be proactive and transparent and just do it up front. Do it up front. Yes, you might let go of a few coins right now, but it's so much better than getting hit with the penalties and interest, and it's getting compounded. A lot of times the interest alone can be more than what you actually ended up owing, because no. They go back to the original file. Yes, it's a lot. So
way more.
definitely.
It's not the taxes that you owe, it's the interest and penalties that will kill you. And you want it, and like I said, the keyword, the Sesame Street Playhouse, no, the Pee Wee Playhouse. Adrienne is young; she don't even know who Pee Wee Herman is.
Wow.
The special word is going to be proactive, right? So here's the difference of you just doing a tax return. If you do the tax return, yeah, maybe a human that reads it, but if you electronically file it, maybe they might go through it, and yes, you might get a letter to prove stuff it. But if you get a letter, it might be a designated agent that say, you know what, I want to see this, and it's a lot harder because now you got to really prove a lot of stuff rather than just saying, hey, here's the form. If you got any questions, let me know. But you don't want them to say, hey, yeah, you didn't find nothing. You got to prove this in the court basis. It's nasty.
So I do have a question. Yep. So if someone is saying, all right, I do want to get proactive for 2022, what are what's a starting point for them? Where should they start off? What should they do?
You got to be really honest with yourself. You got to say, okay, did I sell anything? Because that's taxable transactions. Did I use it to buy anything? Because a lot of people is using crypto to buy stuff. The moment, let's say the moment you buy something, that's a taxable transaction. A lot of people like to disagree with me and stuff like that. But if you can't show me and Adrienne the IRS letter about it or the IRS writing about it, then you can't go by what somebody supposedly say. Because a lot of these advisors and investors, they want to sell you a dream. But anytime somebody do that, I say, okay, show me the IRS when they said that. And if they don't say it, don't go by it.
And I mean, I especially since this is a gray space where there aren't a lot of rules, it's often, and they're still figuring it out, take the most conservative approach.
Yes.
If they make a rule later and you realize, oh, I overpaid, you can always get the money back. But if you find out you underpaid, they're going to hit you with penalties because they're not as nice, right? So they'll give you your money back, but they're going to, if you owe them, they're going to hit you with penalties, interest, and they're going to say, you actually owe me way more than you thought you did. So sometimes it pays to be a little bit more conservative, especially since the rules aren't finalized yet and they're still figuring out and navigating and getting that information.
And we're going to break it down. So we intentionally just doing baby steps right now. We're being very generous. So don't be like, oh, they didn't tell me nothing. Believe me, it gets way more complex than this. But at the end of the day, if you sold any crypto, please review it. If you brought anything with crypto, review it because that's taxable. If you got airdrops is a taxable transaction. That's when maybe they entice you by giving you free crypto. That's tax, that's reportable. So if you have those three things at minimum, have a conversation with your tax accountant that knows it. And I did a whole thing about how to interview your tax accountant. Just because your tax accountant was your tax accountant for the last 15 years doesn't mean they're the best person to talk to you about your crypto. You got to really interview them and make sure that they know how to include it and know when it's taxable or not.
All right. Well, thank you. I mean, this is just a starting point. We will have a lot more information as part of this series. So just want to say, Jamaal, thank you so much for doing this with me. I'm really excited to bring this information to the people, to the Fame fam, to your community. So we will bring more information to you. So stay tuned, and that's a wrap. So see you next time.